Now, let's look at the accounting estimates. So, what is accounting estimates here means? It is an allowance to reduce inventory and receivable to their estimated realizable value. It includes depreciation or amortization, accrued revenue, deferred tax, provision for loss from lawsuit, and provision to meet warranty claim. In accounting estimates, the audit evidence is essential for auditors to obtain to determine the accounting estimates. While the process of accounting estimates are the responsibilities of the management. However, it is known that accounting estimates can either be simple or complex. For example, accruing rental expenses is simple than estimating provision for slow-moving inventories. Let us look at the audit procedure involved in accounting estimates. There are two procedures which are reviewing and testing process used by management, and reviewing subsequent event which taken place. In reviewing and testing process used by management, procedures such as evaluating data and considering the assumption which are used, testing the calculation and comparing the estimate of current and last period are being implemented. While in reviewing subsequent event, it is to identify an audit event regarding accounting estimate made by the management which arise from the subsequent event. For example, inventory damage by fire and customers' bankruptcy. Next, we look into the related parties transaction. So, what does related parties mean? It is where an entity that is related to the entity which is preparing its financial statements are known as reporting entity. Example of these entities are affiliates, subsidiaries under common control, parent entity, and trusts for benefit of employees. Then, what is related parties transaction? It is a business agreement between parties which has a close association. It includes purchase or sale of goods, purchase or sale of property and other capital assets, rendering and receiving services, leasing and rental agreements, transfer under license agreements, and financing agreements such as loans and equity contribution. For the audit procedure, it shall be performed by auditor. The purpose is to collect audit evidence regarding related parties transactions and identify the effect on financial statement. The information which related are collected from client at completion of audit procedure. It is to ensure appropriate disclosure in financial statement. Below are the audit procedure involved in the related parties transaction. Among them are identify related parties and transactions through last year working paper, reviewing minutes, corporate structure and discuss the matter with management, confirming the related party, terms and transaction amount which are involved, inspecting the documented evidence in the related party possession, and obtaining written representation letter from the management concerning the completeness of information providing in this financial statement and also the adequacy of related party disclosure in the financial statements.